Hey everybody, this is Jordan. This video is being recorded on Thursday, February 8th, 2024. Thank you so much for tuning in today. In this video, going to talk about the precious metals breakdown against the stock market. Yes, even though gold is holding up really well, still within less than 2% of closing at a new all-time high, major breakout territory. And despite all that, or I could say in spite of all that, depends on your point of view, the entire sector is very weak against the stock market. You know, at first I was thinking about saying the precious metals are weak in real terms, but when you look at bonds, that's absolutely not the case. So it's weak just against the stock market, but very weak. So let me get into it. Just two charts today. This is more, I can't say short term. This is a 25-year chart, but I am going to go back in history in the second chart. But here's the first chart. Gold here, this moving average, it's equivalent to the 40-month moving average. And you don't need to hear me talk. Just look at the arrows. You know, this is very significant. So gold is holding up really well. I mean, 2047, even if it loses 2000, could come down to the high 1800s. That's totally fine. That's not going to damage, this beautiful setup, even if it continues for several more months before a breakout. But, problem is, if we're looking at real terms, this is gold against the stock market. As you know, it's broken down. I should have added a line here, but it's lost this support right here. So I think a couple days ago, this was at a 2-year low. So this is headed for this blue line right here. And, maybe it'll even go below it. So that's definitely something to consider. I don't know if it's going to get all the way back down here. That's quite, I don't think that's going to happen. But it could certainly break this blue line at some point. And, a couple of videos ago, I had one of the slides and I mentioned, let's go back to this significant bottom here in 2018. This happened right here when gold against the S&P, that was at an 11-year low. And it was just, no support. It just kind of randomly bottomed. And of course, that was the start of an 80% move over 2 years. So even though this could break here and look like shit at some point, that doesn't derail the potential for a big breakout later this year. But nevertheless, here and now, not good. Probably continues in the short term. We have to see this thing turn around. Now, the rest of the sector, look at silver against the stock market here, gold stocks. This is the index GDX is based on. So starting off with silver, you could have a historic double bottom in silver against the S&P. So you have this low right here, which is hugely significant, obviously, and silver has been stabilizing for many years, but it's starting to crack. And if it loses this last support here, if it comes down, then you're looking at down to, that's potentially a 20-year low. So if this ratio continues lower, not only is it going to be at a 20-year low, it's headed for probably retesting, and this is probably an all-time low. I don't know off the top of my head, but I think it is. So this could break down and this could come down and make an epic, major historic double bottom. But again, there could be more pain ahead. Okay, gold stocks against the stock market. This is the parent index for GDX. I use that because you get the history going back. Now, there's many different gold stock indices. You have the Barron's Gold Mining Index. You have the S&P TSX. You have the XAU, GDX, UE. Some of those are showing that this gold stock's relative to the stock market. It depends on what index you look at, but they're at or really close to an all-time low. So this is, again, the parent index of GDX. This is broken down. It's lost this support, lost this 9-year support, and it's a little bit above this low at the end of 2000. Now, if you look at the Huey is stronger. So the Huey index, there's more to go to get down here. If you're looking at the XAU, it's already at a new all-time low. So gold stocks are shit right now against the stock market. Let's just say that. What's the larger historical context of all this? Precious metals looking like crap against the stock market across the board. despite gold holding up really well here in nominal terms, well, number one, I think it's the stock market in the early 80s, the stock market in 80 or 81, before that epic bull market started in 82. You look at the S&P or the Dow, before that secular bull started, there were points where the stock market, it was at an all-time high and really close to that big 13 or 16-year breakout. So that's the best comparison. Secondly, and I'll get into this here, and this is taking a historical look. So the second comp is, be it the mid-60s or the late 60s and also 2000, there were historical points here where precious metals relative to the stock market just were at, multi-decade lows. It looked terrible, major downtrends. But then you had the start of secular bull markets, not only in 2000, but in real terms after the mid 60s. And I've done one or two videos on this, in the past. But I want to go over it again, and we can think about the comparison. So the dashed line here, those are the secular peaks in the stock market. So we have here, we have this one in 2000. In the S&P, it was the end of 68, but, in the Dow, it was 66. And so in real terms, you can say it was here, because in the S&P, from this peak to here, that was only plus 15%. So that's why I have the two lines in here. So looking, here's silver against the stock market. And, we can just see this ratio. I should have put another support line in here, but look, in the early 60s, this is really close to the 1930 low. And even here at 1966, and even here, late 71. So these lows were very close to this low. And again, you can see where we are now historically. This isn't, okay, I haven't updated this data yet, but, I showed you in the last slide. It's really close to here. Moving on from that, so gold against the stock market. Now, we know the gold price was fixed, so it's hard to make a historical comparison. It probably would have been here, it would have been higher, so we can drop that for a moment. So gold stocks against the stock market. These are two indices, historical indices that I updated: the S&P TSX, Barron's Gold Mining Index, and so again, you have the secular turn here in 66 and 68, and then I put this line here just to make a potential comparison to where we are. And so look at this here. This is early 64. This index is at an all-time low relative to the stock market. And we know what gold stocks did over the next 16 years. Barron's Gold Mining Index was stronger than the S&P TSX in the 60s. So from here, it's a little bit above this, but still, historically, it's not, historically, this is pretty close to a 32-year low. This is the only thing here that's lower than this. And so, Barron's Gold Mining Index is a little bit stronger than some of the other ones. So it's not quite at an all-time low yet. The S&P TSX, you can see what I was talking about against the stock market. This could be, in the last couple of days, this ratio could have hit an all-time low. So with where we are here and now, obviously these ratios in these charts, they look like shit, long-term downtrends. But you could have said the same thing in 1964, or even I want to say 1970, because if you're looking at 1970 or 71, before everything changed, here's silver against the stock market. Here's gold against the stock market. Again, it was artificially low, but here you can look at gold stocks against the stock market. The low in real terms is really here. But you get the point. So I know I'm babbling on here, but that's basically the big picture, is that gold is still really close to a breakout, but we are seeing a breakdown in precious metals in real terms. But that at some point is going to lead to a huge secular turn in precious metals. So we're not there yet, but we're getting a lot closer. So there you go. If you made it till the end of the video, thank you for tuning in. Let me know what you think. Leave a comment, and I'll talk to you guys again in the next video.